Once again, thank you all for showing up. Thank you for dedicating this time to show up for this awesome webinar that we're about to have, where we're going to talk about industrial real estate, how you could potentially get educated on real estate, get involved, this, that, and the third, and why I even chose industrial real estate, because I know in my specific, I guess I should say, group of people, most of them actually probably like 90 to 95% are in multifamily. But here we go. So I'm going to share my screen. Let me know. Drop some ones in the chat if you are ready to get started. Drop some ones in the chat. There it is. All right. So once again, thank you again for showing up. Everybody, continue to drop where you're from in the chat. This I want to be interactive. So ask your questions, interact with me in the chat. Let's keep this lively. And today we're going to start the light industrial secrets webinar. So let's get this started. So just a few house rules before we get really started and I start introducing myself. Number one, and I talk about this myself every single day and with my children. Make sure we have fun. Like that's always my rule number one. It's hard to enjoy life when you're not having fun, no matter what task you're doing. Also, like I said, let's participate. Participation keeps me engaged and not just feeling like I'm talking to y'all. So I would love, let's participate, ask questions. We will have a Q&A at the end. So continue to drop your questions in the chat. We're going to go through them, answer any questions. Also, this has always been my rule number one. Positive vibes only, like PVO. Like there's no room for negativity. We don't have time for negativity. Let the negativity stay in the negative streets. All right. I also always advise, take notes, get your pen and or pencil, get a piece of paper. There's something about writing. I mean, you definitely could use the notes in your phone, but there's something about writing. The connection between actual physically writing something and your brain, you're more prone to coming back to it and remembering it if you write it down. And then last but not least, the last rule is the first rule, and that is have fun. Like we're going to have fun. If you came on earlier, we were listening to Bob Marley. So I'm out here having fun. If you know me, I love having fun. So who am I? So let's get into a little bit of backstory. At the age of 8, I realized that I had a high propensity to go on an entrepreneurial journey. I can vividly remember me having the idea of wanting to build a lemonade stand, but I just didn't know how. I really didn't have the people around me to kind of influence me and push me to go do that. So I never really spoke up for it. We fast forward. I was also quiet. I was reserved. If you've been on the phone with me, you probably wouldn't know that. But yes, I was definitely a quiet, reserved kid. I didn't really talk too much unless it was recess time at school. Uh, but I love people. I love being around people. I actually get energy from being around people. I could literally go from like being in a blase mood to, if I'm out with the broker, I'm out with the agent, and we're starting to mix and mingle, I will get in the car and I will feel amped about the conversation that we had. I like being around people. Uh, Continuing to fast forward, I went to Ohio State. I'm a Ohio State grad, graduated with an engineering degree, started pursuing entrepreneurship after I quit my job after 10 minutes after I graduated high school. And I failed 5 times. I had 5 different businesses um, while being self employed. And then I also, during that time, especially around COVID, I started learning how to trade, specifically in the foreign exchange market and then later in the futures market, and realized that I was tired of trading my time for money. So I needed a vehicle that would get me where I wanted to go at the speed that I wanted to do it and still allow me to be with my children. First and foremost, I'm a father at the end of the day. So that's always at the forefront of my mind. Where in the future do I want my family to be? Always, every single move that I make is about me and my family, no matter what. So yes, as I said, I went back to the W-2 life because at that point in my life, I had a vision. I knew where I wanted to go. I knew what I wanted my life to be like. I knew the things that I wanted to do with my life, with my family, what type of impact I wanted to leave on the world. And that's why I started investigating real estate, starting with tax liens and tax deeds. And I realized that that wasn't the path for me because I had a conversation with somebody who said, you know, essentially, even if you are where you are, you still need to have relationships. So I continue to get financially literate and figure out different ways in which I could make money at the speed that I wanted to make money at, and also allow myself to get the tax benefits because I was always wondering like why are people how are people not paying taxes? Like I don't understand that. So I continue to investigate, to continue to educate, which led me to my first introduction into multifamily real estate. And when I say multifamily, I'm not talking about like duplexes, triplexes, quadplexes. I'm talking about like 100 unit properties. Literally, it was a Grant Cardone webinar, and he told everybody in the webinar, if you've ever heard heard Grant Cardone speak, go big or go home. Like that is his big thing. Uh, and then as I continue to get more familiar with the commercial real estate space, I found myself wanting to be in the industrial space because of some factors that we will discuss later. But as I said, all of these decisions come from that's me. Right behind me is my son. And if you see that little blue dress in the background on my shoulder, that's my daughter. That's what she does. If we are out by a creek, yeah, she's in the rocks. She likes to get her hands dirty. These are the people that I really do it for every single day. So every day I wear fatherhood on my sleeve. If you have kids, you understand how hard it's not to have a conversation with somebody and not talk about your children. So yes, drop some threes in the chat to let me know y'all still with me. Drop them in the chat to let me know y'all still with me. Yes, yes, yes. Let me know if anybody here have children, so I can kind of get a gauge of who I'm talking to a little bit. Okay, so we got one person with children. Cool, cool. All right, let's keep it moving. Let's keep it moving. I want to make sure I continue to respect y'all time. So when we're talking about industrial real estate, we're talking about warehouses. We're talking about local businesses. We're talking about logistics, distribution centers. Uh, right now, it's so interesting. Every time I'm coming home, there are there used to be an oil refinery. And once I got into the real estate space, I don't know how many, I know a few people who are in the real estate space, but when you're in the real estate space, you start to see your environment a lot differently. Let me know in the chat, drop some twos in the chat if if your entire world has changed the way that you see it because now you're in the real estate space. Like, I went to Baltimore earlier this year and literally I'm just looking at every single building and the question I'm asking myself, hmm, who owns that building? I'm looking at industrial properties. Who owns that building? Like I want to own that. I want to own these buildings too. It's just like it's kind of like once you know, you it never turns off. Um, and then we also have manufacturing centers. These are where you know you might be developing anywhere like your plastic bottles, Coke, they have to have a manufacturing center. They got distribution centers. These are all in industrial real estate assets. And guess what? People own these assets. And the cool thing about this was a fun fact that I learned last year is regular people just like me and y'all on this call, Barack Obama was able to give us the opportunity to invest in these assets. So, no matter what your feelings are about Barack Obama, President Barack Obama, you know, big snaps because he was able to allow the average person the ability and the opportunities to invest in any type of commercial real estate. So let's continue. So yes, reasons why me specifically, I chose real estate. As I said, I love telling stories. I think stories are the best ways for people to learn. Back when I first started researching and getting into the commercial real estate space, I um, I came across a broker and we were having a conversation about a multifamily unit here in Philadelphia, and actually it was right around the corner from my school, from my grade school, and he was asking me questions. I was like, yeah, nah, I don't want anything that has vacancies. So we start talking. Oh, so you're looking for something that's already producing income? Yes. You're looking for something that already has cash flow? Yes. Already kind of stabilized? Yes. So we're just checking boxes off as he's asking these questions because he's wondering why I'm not interested in this. It was a mixed use property. It had an office space on the bottom. It had two units above the office space, and in the back, it had like a nine-door garage with a big parking lot. And it was specifically geared towards somebody who owned like an auto shop because it was in a package. It was a package deal. And he said, "Okay, I got two properties for you. Would you like to check them out?" I said, "Yeah, for sure." He sends them over to me. I say, yeah, I'll give you a call back probably tomorrow. I go through those, what they're called offering memorandum. So offering memorandum is just, what is in this this real estate opportunity. The pictures of the building, some give the financials of the building, just just everything about the building. And I'm going through and I'm just seeing the differences between multifamily real estate, industrial real estate, and these are the five things that really blew it out of the water because I knew as a father I could not specifically tend to tenants with the lifestyle that I have. I don't have time to just be, I need somebody calling me 1 o'clock at night. Hey, I got a clogged toilet. I don't even want that lifestyle. Um, I already have to deal with a child potentially clogging the toilet or a nosebleed or just any random mishaps that might happen through the night. So one thing that I saw was that really stuck out to me is the least flexibility. And what I mean by that is with industrial real estate, it gives you the opportunity for the tenants, and these tenants are businesses, as we talked about earlier, the warehouses, the logistics, manufacturing. You can put all of those expenses onto the business themselves, which I was like, oh, bet. Like I don't have to worry about a phone call about a toilet. I don't have to worry about a phone call about, somebody putting a hole in the wall. The business could take care of that themselves. Like if that's something that sounds really good to you, drop a 5 in the chat. Like you own something and you don't have to worry about the expenses of somebody putting a hole in a wall or anything of that nature. Right. So When I found that out, I was like, oh yes, that's number one. Let's go. Number two was the lease terms. And it has let me know in the chat, drop a one in the chat if you have ever rented. Drop a one in the chat. Let me know. So we have someone who rents. And when you rent, how long is that lease term? It's probably I mean, I've rented before, and usually it's either a month, or you have a year. Well, in industrial, it's very rare that you have a month to month or a year. Usually, at least in the ones that I've seen, we're talking about 5 to 15 years that this tenant is going to be in this property. And that's not even them starting in that property. They could have been in that property for the last 30 years, which, once again, another thing that checks off the box. I don't have to worry about somebody potentially leaving next year. Like the probability of somebody leaving next year in the industrial space is very low because once again, these tenants, I'm getting ahead of myself. I'm getting excited because I got so much information. Let me slow it down. But yes, we're going to move on to the stability and the predictable cash flow that comes along because of the first 2 points that I talked about. We already know we have the rent. The rent is already in place. You know how much you're going to get paid every single month in industrial. The terms are already there. You know that this tenant is going to be here for the next 5, 8, 15 years. And then you also have built-in rent bumps. So once again, in multifamily real estate, you kind of gotta go based on the market with the rent bump. The market is only calling for, a 2% raise every year. And that's also dependent on what you're offering. So if you're not offering granite countertops, like, and you starting to raise rent, why are your tenant's going to be like, why are you raising rent? You didn't do anything. But in the industrial space, it's built into the contract. It's built into the lease. Maybe it's 2.5. Maybe it's a 3% rent bump. Maybe it's a 5% rent bump every single year that tenant is in there. So if we have a tenant in there for the next, let's say, 10 years, every year that tenant's rent is getting increased by 5%, 3%, whatever is in that contract. And it's cool because, as a landlord, you would be wanting to make sure that that business that's in there, that tenant, is comfortable and still going to continue to rent in this property. So when I'm looking at a deal, me specifically, uh, I actually had a deal this week, and it fit all of these keys, all of my success keys. If I would like to move forward with the deal or hand it off to my acquisition team, I look for these. It has to have a strong location. What I mean by a strong location, it has to be in a industrial corridor. Um, that's close to a highway, some type of highway. That's a strong location because you want to make sure that trucks can get in and out of the property and to their destination with ease. Having a truck go, I mean, let me know in the chat. Give me a two in the chat if you've seen a truck try to make an inconvenient turn and you're sitting in traffic for like 10 minutes, all because they can't get around that bend. I'm gonna raise my hand because where I work, absolutely. I see trucks maybe like once a week. They're coming down the street trying to make a turn. The turn's too sharp, and guess what? Everybody's stuck in traffic for at least the next 10 minutes because there's cars parked. It's a thin street. Nobody's going anywhere. But when you're considering these industrial properties, that's super important. The maneuverability of these trucks. Also, number two, it has to make me money on the first, like day one. So when I'm going through the process of seeing the financials and going through the last point, the risk mitigation, it has to be making money the day that I close on the property. If it does not, then it's not a deal for me. It's not a, and let me repeat that. It's not a deal for me. Some people will take deals where they don't because they see the potential. Like people who work for institutions, they can do that. They're probably planning on holding on to these deals for some time. And then once again, we look at the time the tenant has been in that property. Some tenant, like I said, some tenants have been in these properties for 15, 20, 30 years and they have a foothold in the market. They're not going nowhere. Like think about it. Let me know in the chat if you like moving. Just drop a zero in the chat if you like moving. You got to pack all your stuff and you got to go somewhere else. I know me personally, I don't. I don't like packing up and having to move somewhere else. But and I'm sure neither do these companies. They have stuff on stuff on stuff. Like I said, the one the property that I talked about earlier that I did end up visiting last year, it was five different businesses in this one warehouse, and they all had different setups. Some had more equipment than other ones, but there was one that had refrigeration. They had probably about like 50 refrigerators in the back. If you think they want to move all of those refrigerators just because they want to find another space, but they still have a foothold in the market, they still have what they need to be in their property. If you think so, I'm not sure what you thinking if you don't like moving. But then we get into lease type, we get into building functionality. Those things, as I talked about earlier, there's there's different types of leases in this space. Some they just cover the taxes. Others they cover everything. They literally pay you for the taxes, whatever they need. Especially businesses that are specialized, they will pay for everything. They pay for the maintenance, the whole nine yard. All you're doing is collecting a check at the end of the month. What's a bad deal? I know, we can always talk about the good, but what's also a bad deal? Like I said, we talked about the example earlier. Trucks that can't maneuver in the area, get to the highways, get to the freeways quick enough. That's a bad location. Weak tenants. Hey, you haven't been there for very long, or you start going through the financials and they're not paying their rent. Yeah, that's not a good deal. Like it, I don't know who would like a tenant who doesn't pay their rent, but I know I wouldn't like a tenant who doesn't pay their rent. Also, if you see that in the area that there's too much properties in there and none of them are filled, that's a bad sign. That means that not enough businesses are in the area to fulfill the the supply that's out there. We also have the cash flow. Like I said, I'm not buying a property that doesn't cash flow on day one. If one has to be a tenant, that's the only way it's going to cash flow. And then after that, if as long as you can protect me from the risk when it comes down to the debt leverage, we're good. We're good. And then of course, location, location, location. I'm pretty sure if you've ever heard anybody talk about real estate, location is key. That goes into the location's ability to get these trucks, to get their workers on and off of highways quickly and freely. And then this right here, this is my five-step framework. This is literally like every single property that I looked at all this week, last week, months before. This is my entire framework. I look at the tenant because that's most important. We're like, does anybody have any real estate? Let me know in the chat if you have any real estate. Okay, no deals yet. I like that. First and foremost, I love that phrase, Gina. Gina, yet. Like that means we still working on it. We're still working on it. But if you've heard of bad tenants, people having bad tenants, drop a one in the chat. You ever heard of anybody having a bad tenant? They complain about their tenant. The tenant doesn't pay rent. Every time you go over there, there's messes. Right. We all hear those horror stories. I have a neighbor. He's owned real estate for I don't know how long. Actually, Since I was in high school, he's on real estate, and he sometimes I hear some stories. Tenants not paying rent. You want to make sure your tenants paying rent. If they're not paying rent, you're not getting paid. So you have to do the history on the tenant. One, do they pay rent? But also, what is their business? I have I've been in the stock market, so I'm used to staying on top of businesses, understanding what they sell and who they sell to. Because if you don't know that, what's the point of investing? Once again, when you're in industrial, you're investing in the business, you're also investing in the property itself. And these tenants, they have to have some type of foothold in the market. Also, you want to look at also I look at the floor plan. It has to be something that, okay, this tenant leaves, another tenant could easily move in because the floor plan looks well. The location in real estate, they always talk about location, location, location. You can't run away from that. A bad location can create a bad deal. That's great that the property looks good, you love it, but you don't marry the property, the looks of the property. You marry the whole package. So location is key. I really can't emphasize how important that is because literally that is the first thing I'm looking at. I don't even look at the numbers. If trucks cannot get on and off the highways quickly and easily, it's a no deal for me. And then once again, does it make money? That goes into the cash flow, that goes into the risk mitigation. We have to protect ourselves from risk when you're investing in industrial real estate. It's super key because actually I just heard a story these past 2 weeks, big story in the real estate space. I'm pretty sure everybody knows about it, but there's this guy, he just lost $15 million of investors' money. So, and that's because he did not mitigate his risk. He did not protect himself from the potentials of what can happen next. So we are now coming to the end of this. This QR code will take you to staying connected with me, being able to get more educational insights outside of webinars, because this is going to be a monthly thing. So I hope to see you next month. You're going to get any market observations, any deals that I'm currently looking at, telling you what I looked at first, what my process is, any updates on potential opportunities. So if you do find yourself in position or have a desire to invest, you can invest in these deals also. And then also, like I said, you'll continue to get access to future webinars and future events just by staying connected, clicking that QR code. You'll be in every single time. You'll get notified because once again, this is happening monthly. I'm dedicated. So now I want to open this up to any questions. I'm here to answer. It's okay if you don't come up with any. Feel free to email me. You've been getting emails from me, some of you for the past 3 weeks. However long when you registered, you got my email. So I want to open this up for any questions. All right. If you have no more questions, does anybody need me to go back to the last slide so they can scan the QR code? Oh, we have a question. How many properties do you look at monthly? Ooh, um, I would say on average, I probably look at 20 properties. And that's an average, and I had to average it because couple months ago, yeah, a couple months ago, I was just going in, not gonna lie. I was just going in and I think I looked at like 100 properties in 3 weeks. Like I was really going in. And would I advise anybody to do that? Not at all. Uh so yeah, but about 20 properties a month. Uh, how many do you think fit your criteria? I would say I usually see one property for every 10 to 15 that may fit my criteria. Um, and actually, I'm glad you asked that question because that reminded me. I actually had two properties that I looked at last week. Saw them. I got them online, and I went through everything. I went through the whole framework that we just talked about, and I got to the numbers, which is my favorite part. Apparently, I'm crazy for loving the numbers aspect, but hey, I'm okay being crazy. I already know that. I went through the numbers. Everything worked out. I sent it over to my acquisition manager, and she came back saying these were her exact words because I remember because we talked on Tuesday. She said the deal is a yes, but so far as going forward with it, it's a no. And I feel like everybody in real estate, they make slight mistakes. And I made a slight mistake because the advice that I took wasn't wrong. It was just, I didn't take this into account. When you get information from brokers, they love to boost the market. So it's called pro forma, and pro forma is essentially what the numbers would look like in a perfect world. You know, the rent is where the market is, da 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 da. But usually in pro formas, it takes years to get to that point. There were taxes that are in the pro forma, and I remember right now, 70 the taxes were 76%, $76,000 that they pay. The tenant pays that on their own. They pay that. I don't That doesn't come out of the landlord's pocket. But years down the line, maybe about like 3 to 5 years, that $76,000 goes up to $202,000. And I overlooked that. And if I wouldn't have overlooked that, I would have saw that the deal absolutely doesn't work. It doesn't matter how much money it makes right now. It doesn't matter how big the rent bumps are at with the current contract. That deal would not work because it would not outweigh the debt that would have to be taken on the property. So that going into back into that criteria aspect, making sure that it still makes money in worst case scenarios, because once again you have to be aware of potential risks that come with it. And like I said, with that the big story that's out in the real estate space, that's one thing that they did not take into account was the risk of their floating debt making their monthly payment higher than what they were making through the property. So thanks for asking that question. It's a really good question. Any other questions? All right, all right. Thank you. Oh, wait. Cool. Yes, for sure. Thank you for attending, everybody. We're gonna wrap this up. Since you did attend, you will receive a replay just in case you need to go back. You need that QR code. You need the link. You will receive a replay of this, and I look forward to seeing everybody on the next one. Y'all have a great one. Enjoy your weekend. I'm not sure where you are, but it's going up to 91 here, so I'm definitely going to go enjoy that because that's my weather. That's my preferred weather. So, thanks again, and I will see y'all on the next one. Peace.